Hey friends, Lucian here with the Bullish Bears team. This video is going to talk to you about paper trading and why paper trading is important. If you're new to getting trading, it's very easy to kind of get caught up in the emotions of trading, right? You want to make money right away. You want to get in on the action. If you're in our trade rooms, you see other traders talking and interacting and making trades. If you see our trade alerts coming through, it's very easy to want to kind of jump in on the action and start trading with real money. And what I want to tell you is right off the bat is don't do that, right? Take some time, take a step back, learn how to trade first. And the best way to do that is by using a paper trading or a virtual account. And what a paper trading account does is it allows you to trade the markets without having to risk real money. And that is what's great because it takes some time with any career, any profession, anything you want to learn. You got to put the time and effort in first and learn how to do it. And with a paper account, you're able to learn how to do real world trading without having to put real money at risk. And a lot of new traders, they don't do that, right? They risk their real money first. They end up blowing up their brokerage account, and then they end up blaming the market, right? Saying the market's out to get their money, trading is a bunch of gambling or hocus pocus, and that is not true. The reason why this happened to most of those traders is they didn't take time to practice and learn first. Right? And the great way to do that is use a paper trading account. So we encourage our members to use a paper trading account for, maybe up to several months. Again, everybody's learning curve is different. If you catch on real quickly, maybe you're only doing it for a few weeks or a month or so. But if it takes some time for you to learn, invest and use a paper trading account for a few months. Track your successes. And once you have, about a 60 to 70% success ratio and you've made at least a couple hundred trades, then you want to slowly scale your way up with real money. Now, I want to be very clear. I wish everybody made money on every trade and that you can make money 100% of the time in the stock market, but that is not true. The best traders in the world, they still fail 30 to 40% of the time. But the reason why they're successful traders long term is because they manage their risk. They keep their losses small and their winners outrun their losers, right? So when you're trading or paper trading or trading in general, when you start off with paper trading, once you can track your successes and you can see yourself having that good 60 to 70% success ratio, then you slowly scale into trading with real money. Don't go in right away starting to trade, real big positions. You want to start off slow. So let's say you were going to trade 1,000 shares generally of a stock. Well, practice trading 1,000 shares in a virtual account. But then when you're successful in your virtual account, don't go right away to 1,000 shares in a real account. Start with 100 shares. Then scale your way up to 250, then 500, and then maybe up to 1,000, right? So slowly scale your way up after you successfully traded in a paper account. One of the best pieces of advice that I can give you is that when you're trading with a paper account, take it seriously and treat your paper trading account the exact same way that you would with a real account. It's very easy to not take your paper account seriously. These brokers, like someone like a Thinkorswim, they might give you $200,000 in your paper account. And you're like, oh, great, let me go buy 10,000 shares of Apple. Don't do that because that's not what you would do in the real world, right? So you want to take that paper account, forget how much money is in it, and trade the exact same amount of shares and use the same risk management that you would with real money. So if you were going to trade 1,000 shares in the real world in general, then use 1,000 shares in your paper account. If you were looking to, let's say, risk $1 on a trade and you're looking to make, $2, plan out your entries and exits the same exact way. If the trade goes against you, don't just stay in it just because it's a paper account. Cut your losses with the same exact stop loss that you would with a real account. So take your paper trading account really seriously and treat it exactly the way you would a real account. Now, tracking your trades is also very important. Again, you can't, along the way, how do you know if you're doing, good or bad, without tracking your trades? Obviously, winning, making money, you can say, hey, great, I'm doing well making money. But how do you learn from your losses? How do you also learn from your gains, right? The best way to do that is by tracking all of your trades in a spreadsheet. So you want to track both your wins and both your losses, right? So put notes in there too, have a column for, what went well, what went against you. Again, kind of get some good data and track it. And what you want to do along the way when you're planning your trades, you again want your winners to outgain or to outwin your, to be better than your losses, right? So you want your wins to be greater than your losses. And the way you do that is you want to enter in each trade with at least a minimum of a 1-to-2 risk reward ratio. Ideally, you want 1-to-4 or more, but what that basically means is if you're risking $1 on the trade, you want to have the ability to at least make $2, $3, $4, right? Don't just wing it, right? This is where support and resistance comes in. So when you look at support levels, if you're looking to get in an entry and you're like, hey, I'll risk $1 stop on this trade, look at the next resistance levels above and say, hey, do I have a window to make at least $2, $3, or $4? If so, that's a good potential trade to take. But if you're risking $1 and you can only make, let's say, $1 or 50 cents or 25 cents, that's terrible risk management. And that's where your losses will outweigh your gains. So the way to get your gains to outweigh your losses is set up your risk management the right way from the start. Have a minimum of 1-to-2 risk reward, but ideally 1-to-3 or 4 or more. So that way, when your winners run and you have those bigger runs, they offset your losses. Now, there are a lot of different brokers out there that offer paper trading accounts, but a few of the better ones are Thinkorswim. They have one of the best, if not the best, paper trading account. Interactive Brokers is good, as well as TradeStation. And here's something that's very important tip for you. You want to make sure that you have real-time data added onto your simulated or paper trading account. If your company doesn't have it added by default, then you want to call your broker, call into customer service and say, hey, I need to have real-time data on my paper account. If they don't add it by default, you may have to put $50 or so into your account. Again, depending on when you're watching this video, the brokers change. Thinkorswim used to be really great with not having money in an account, but now sometimes you have to call them up and just put $50 into account, and then they'll add real-time data. But it's worth it. Again, you want to treat your paper account just the same exact way as you would a real account. So that's why you want real data feeds. You don't want simulated or delayed data. Here's an example of Thinkorswim's simulated trading platform. You can see at the top left of the screen, it's kind of got like a goldish shaded area and it says simulated trading. But this platform that you see here, you can customize it exactly the same way you would your real account. So your real account would look exactly the way your simulated account would. It would just have a different look when you log in for color. But when you see that simulated data up there, you'll see where it says real-time data on there. That's because I have real-time data rather than a delayed data. A lot of times when they, depending on your broker, it might come out of the box with delayed data. That's why it's very important to make sure your broker adds real-time data. So with Thinkorswim, you typically got to call them up. You might have to put, it's $50 or so, depending on when we watch this video. They'll put real-time data on, but it's very worth putting that money in so you can trade the markets real time using a simulated account. Now, I can't stress enough that the best way to learn trading is through real world experience. Learning in a course, learning in a book, learning in the videos is great, but the best way to learn is hands-on with real world experience. Now, we do offer trade rooms to our community members, and they're a great place where you can come in and learn how to trade real time. You can ask questions from our mods and other community members. We do real time mentoring, coaching, showing the markets. We are not a pump and dump community, so it's not like you come in our trade rooms and like, oh, they're just pumping stocks. No, that's not what we do. We teach and we trade and we show how the process comes together real time in our trade rooms. So if you want to learn, take what you learn in our courses and see it real time. You'll see real time charts, all different symbols. We show the goods, the bads, all day long in our trade rooms. We do streams in the morning and also in the afternoons. Another great way to learn too is our real-time stock alerts. So we do real-time options alerts. You can trade shares if you don't want to trade options, but we do call out real-time alerts, and it's a great way to, again, implement them in a paper account. So if you're new and you come and join our community, don't take our alerts right away in a real account if you don't know what you're doing. Practice them first in a paper account, right? Take a couple months, take the trades that come through, practice them, and then when you start feeling comfortable and you're seeing the successes coming through, then slowly scale your way up with real money. Right? So our community is a great place to learn trading, both in our trade rooms and our real-time alerts. So you can take what you're learning in our courses and our next level training that we offer, and then implement it into real-world experience. So again, I can't stress enough how important paper trading is to your success long-term as a trader. Take paper trading seriously. Slowly go slow, again, at your pace, slowly at your own pace, slowly scale your way up with real money when you're comfortable. And then you'll see that just the benefits, it's worth doing it up front because you don't want to become a statistic like a lot of new traders. They don't practice paper trading, they trade real money, they end up blowing up their account, and then they end up regretting it down the road. So hopefully this video helped you, and we'll see you in our community. Enjoy.